Hello, good evening everyone. This is Albert FS here, coming to you with another episode of Trading Digest, where we analyze and then look out for possible or potential setups for the upcoming week. So I believe you will find some value here with me today, and as we go along the session, if you have any pair you want me to have a look at it, to analyze it, you can put it in the chats and then we'll crack on from there. Welcome once again everyone. I hope you enjoy the session once again. If you can hear me loud and clear, just let me know in the chats. You can put it in the chat if the sound is okay. Okay, all right. So on my screen here we have gold as we analyzed it last week. So currently, as we can see, we had a gold pushing up, and then we had this change of character here where price broke below this previous low, causing a change of character. So once this happens, we expect price to retest the origin where it started from. So this is the area where price started pushing down. So this is the supply area I've marked on here. So you can see how price caused this change of character and then pushed up to tap into this area of supply. So with this, as we have it here on the daily, we'll go to the 4-hour chart. So we have this area here, this area of supply where price has tapped in, and you see how after tapping in, pushed down again. If we go down to the lower time frame, we can see it's much clearer. So that's the area I marked on the daily charts, and we had this imbalance area or fair value gap area here. That's now we have price has filled it, so it's cleared this area of imbalance, and at the same time we had this liquidity area that was formed, and now all this has been cleared as of last week, the trading session last week. We had all this liquidity and imbalance area filled. So currently, if we go on the 1-hour charts, this is the area that was pending last week. We analyzed the charts, and now we have price tapping into the imbalance area we identified last week. So price was somewhere up here last week. All this liquidity area was there, and as the week closed, we had price pushing down. We traded down to tap into this area of imbalance, and we have the demand area there as well. So with this, as we know, gold has been pushing up. So from this point on, we are more likely to get a setup looking something like this. Now we have our tap into the the area we're looking at. So we could have a push up back to where price has been going for the past weeks. So yeah, if we go down to the 15 minutes, we'll much have it clearer. There. So this is what was refined last week. I refined this to this point last week. So this is where we're waiting for price to come. So there's a high probability of having this to the upside from this point on. So we target the previous high, which is this area here. So your stop loss goes below the area. So just give it a bit of room in case it wants to push down a little bit more before pushing up. So this is what I'm looking at. So this is my view on gold as it stands. So we'll see how it goes. As again, we are speculators in the markets. So we wait to see a break of structure here, probably to the upside. If we have a market structure shifts from here, then on the retest we can tap into it. Or this is another option. As the market opens, just look out for a buy setup to the upside, and then you can join. Because the reason being that we've had all these liquidity areas cleared. This immediate area of imbalance is also cleared as well. So we have a high probability that price will push up again to these areas. And then if you want to continue up, we'll trade as we see on the charts. Because we don't want to forecast what we can also. We are trading what we see. So as the market shows us what it intends to do, we follow the steps. So that's my take on gold. So we just watch out on this pair to see what happens on there. Other than that, we also have this area to watch out for. This gap area here to watch out for. So we just watch, and then we take advantage of it as the market opens. But currently, that's what I'm seeing here. As we can also see, there are these areas that overall we have this pending areas as well on the mat. It is the daily area of demand which is pending. So already we have this one cleared. So if we're going to have a push down, going to have price turning down. So these are the pending areas that we can identify on the daily. So as we anticipate this move to the upside, because on the daily you can see that currently price is moving sideways. You can see the 20 moving average flat, telling us a period of consolidation, because after a big move we expect price to consolidate or move sideways for some time before it takes on another direction or continue from where it was going before. So with that said, our anticipation this week is, as price has tapped into the fair value gap or the demand area on the 15 minutes, let me make this clearer. So as price has tapped in here, we watch to see any opportunity it gives us, and this is what I'm looking at over here. So without much ado, I will go on to another pair, then we take a look at it. Okay, let's look at BTC USD before we jump on to any other. So if, as I said, if you have any pair you want me to have a look at it, just feel free to put it in the chat, and then we'll digest it together as we go along. Welcome everyone once again. Thank you for joining me as we digest. Okay, so let me clear this and then we'll take it from the beginning to make it much clearer for everyone here to understand. Okay. I hope we had a fantastic time last week trading the markets with some of the analysis that we did here. Okay. So this is a daily time frame on BTC USD. Let me just clear this so that we analyze it from beginning. Analyze this from the beginning, and then we'll move down to the smaller time frame as we refine it to find a sniper area or location to look out for our entry. So currently on the daily time frame, we can see there was a break of structure here. Price move up, had another break of structure, push up to this high, and then we had a change of character, which just refers to price making a low, breaking below this area, this low point that it's created as it's made its way up. So now as we have this change of character, we expect price to push back to tap into the area of origin. So we have on the daily, we have this with this break of change of character, this originated from here. So we'll take this whole area. This is the origin. That is the origin of the move that broke or changed the character of its movement. So we had a high price creating higher highs, and then as it traded to this level, it pushed down to break below this low. So we have a change of character. So now we're expecting price to tap into this area or close to tap into the fair value gap. So let's see, for the supply area to be valid, we should have an area of imbalance attached to it or close to it. So taking these three candles here, we are able to identify an imbalance area. So this is the low of this candle, and then we take the low of that candle, and then we take the high of the third candle. So I'm referring to this, let me change this to imbalance. So I'm referring to these three candles, 1, 2, 3. So with these three candles, as they push down, because this is the move that broke or changed the character of its movement, so I'm using these three candles as my reference area. So with that said, I identify the area of imbalance, the low of this first candle, and the high of the third candle, which I've marked here as the imbalance area. So currently we have a tap into the imbalance area. We have a tap into the imbalance area. So price could turn around as it's below the 20 moving average. The 20 moving average helps us with our trend direction. So once it's below the 20 moving average, we expect to have some downward push or downward movement. So this is an area that is also pending. This demand area is an area that's also pending because we had a break of structure here, where this move started from here, broke above this high, causing a break of structure. So as this happened, we expect price to trade back into the imbalance area or the demand area before pushing up. And also we can see that from this point on, this happens to be the narrow states. This happens to be the narrow states, and then you can see that price pushed up, creating a wide state. So we know that from the wide state we move back to the narrow states. So in moving back to the narrow states, we also have a task to fulfill. That is to fill all the imbalances along the way, clear the liquidity along the way, and then also tap into the origin of this move. Tap into the origin of this move. So the origin of this whole move up here is here where I've marked. Let me clear this so that it will be much clearer. Okay. So the origin of this whole move up to this point is from here. That's where I've marked as demand. And then also there is an area of imbalance that's attached to this origin, which is making it much more valid area of demand. So with this liquidity created here, we expect price to push down to tap into this area. As I explained last week, that when you are taking a trade, or when you're about to take a trade, there are three questions you have to ask yourself. Where is price coming from? Where is price now? And where is price likely to go? So price has been on an uptrend to the Y state. So now price is coming from the Y state, caused a change of character, and then now below the 20 moving average. So price is coming from the Y state and currently below the 20 moving average. So once it's below the 20 moving average, we look to sell. So on the daily, this is what we have here. Currently price is tapping into the 20 moving average area, and that's the same place we have the imbalance. So there's a high probability that it will tap into this area, or furthermore tap into the demand or the supply area, and then make its way down to this pending area of demand, where there's also imbalances to be filled. So this coming week, the target for BTC is to further clear this area of liquidity, and then tap into this zone as created there. Let me put this here. Okay, so let me just go on to further refine these areas that I've put on there. So this is 4 hour. So on the 4 hour time frame, we have the change of character area here, and then we mark this on the daily time frame. So we'll kind of put this here. We are refining the zone, the location. So on the 4-hour time frame, we have the imbalance area from here to here. So let's grab this to this zone. So on the 4-hour, this is how we see it. So the imbalance is right here. We have the last candle that caused from where price originated to cause this change of character also here. So that's why we've marked there as supply area, and then we have the imbalance area attached to it as well. So we expect price to tap into this area and then probably give us another push down to this low, or as we had this we've already had an all-time high here. That's 112,000 that was created. When was that? On Thursday, the first time. Yeah, so this area was created on the 23rd, Friday, from Thursday 22nd to, yeah, so this was the high that was created, and after that, as it's created a high, we can expect some push down to clear some of these areas of liquidity, and then also clear these imbalances that's left here. So currently we have this pending. So let's move further to the 1-hour charts, the 1-hour time frame. The 1-hour time frame. As I said, if you have any pair that you want me to have a look, you can put it in the charts as we go along. So we're further refining our area. So this is the 1-hour time frame. So we have the area right here. So the last candle that was printed before this push down causing the change of character on the 1-hour time frame is here, and then furthermore we have the imbalance area also right here. So what we are doing is refining our location, our point of interest, to wait for price there before we take action. We wait for price there before we take action. So this is what we have here on the 1-hour. This is what we have here on the 1-hour. That's on BTC USD. BTC USD. So we go down to the 15-minute time frame where we can further refine our area. Further refine our area of interests or points of interest. So let's push back. Yeah. So in the 15 minutes, it becomes even tighter. So that is what we have there, and on the area of imbalance we narrow it to this point. Okay, so on the trading time frame, the 15-minute time frame, this is what we have. So after this push down, let it go back to 1 hour so that we can have the charts fit into the screen, and then for better analysis. Yeah, so this is what we have refined the area on the up to the 15 time frame. So this is the area, the zone that we anticipate or we expect price to push back to, and from this point on we could expect a turnaround as we had price clearing these areas of liquidity on Friday. Let's go back to, so on Friday we had these areas of liquidity cleared. So this is an area of liquidity, another area of liquidity. All this was cleared last week. So now that this is cleared, if we look to the left, we see where price got to. Let's see where price got to. This is a break of structure here. So that there is a demand area. A demand area right there. Demand area right there, here. And then we have fair value gap up right above it. Let's mark that as well so that you understand why price got to where it got to and then turned round. So if you watched and then, or you had already marked your setup, marked your charts, you could have tapped into this trade as it's made its way back. So this area here is the fair value gap or the imbalance. So this is the imbalance area, and we had liquidity here. So we had price as it traded to this high coming all the way back to clear all this liquidity that was created, and also tapped into the imbalance area before pushing up again. So that is what we have on BTC USD. That's what we have on BTC USD. Welcome everyone. Hope you enjoy the session. Yeah, so this coming week, as said, we at least expect this to happen on BTC USD from this area back to this zone. So we can see that the fair value gap here is partially filled, it's not fully filled. So we can expect price to come back to fill this area. But where with this push up again, this is where we are anticipating that price will get to tapping into the area of origin from where this change of character occurred. So this is the area of origin. So we expect price to tap into this area and then push back down to fill this, complete this area here. We also have this demand area and this imbalance area pending. So there's a high probability that we're going to have this happen this week. So we have this, maybe that, and then that's. So this is my take on BTC USD this coming week. This is my take on BTC USD this coming week. So let's see how it plays out. Let's see how it plays out this coming week. So this is the area we expecting to take action or look out for any opportunity that it will give us for a sell. Just as price tapped into this area and then pushing up. So we expect this to happen. That's our anticipation. So we look forward to see it play out as we have marked out. Other than that, there's a high chance of it pushing up to create new highs. But before then, let's see how it plays out. We're not going to forecast anything else apart from what we see here. So we had a break of structure, change of character here, break of structure there, break of structure here as well. So we expect price to at least push back to the area of origin before coming down to clear and fill the imbalances left behind. Okay, let's look at another pair. Let's look at British pound, New Zealand dollar. British pound, New Zealand dollar. So on the daily charts, let's see what we can find there. Then we refine it. So as we can see that it's been making higher highs, indicating an uptrend until it got to this point. So that is what price has been creating on the daily, indicating an uptrend. So currently we had price rejected as this level as it's traded to this side, got rejected. Now we have a change of character. Take the first one here. Change of character right here on the daily. Change of character right there. So the origin, let's mark the origin of this move. So the last candle is quite wide area, which we're going to refine as we go along. So this is the zone or the area. Let's take this out. So this is the area of supply. On the daily charts, we go to the okay, let's see if we can spot any imbalance there. So what we can spot here is another thing. That's we have an area of where price there was this kind of volume imbalance here. So currently we have price tapping into that area of volume imbalance. Let me see if I can change this to another color. Okay, so this we have price causing this change of character, and then this area of volume imbalance where you can only see the tails of the charts there. You can't, there's no full-bodied candle in that area. So that area is what is called volume imbalance, this area. So whenever you identify an area like that, you expect price to at least trade into that area as well. It's an area, another area of interest, another institutional reference point where you can look out for opportunities there. So we have this area of volume imbalance where we have, after this change of character was created, we have price trading back into that area of imbalance and then pushing down. So with this as well, we can see that price has already made a high from here, change of character, a push up again. So we are at least expecting a further push down as we have this change of character here. So we expect a push down to at least the previous low point. Let's mark this as well. So we have, before this break here, this change of character here, this is the last candle. Let's pick this point. That is the last candle. So demand. So that's the last candle. Let's identify an area of imbalance as well. So we have the high of this first candle here, and then the third candle we have the low of it as well. So that is our imbalance area to consider. And currently we have this area of liquidity, also calling price. Come to me. Come to me. There's a lot of money here. So the area of liquidity is more or less areas where there are a lot of orders resting there, or stop losses resting there. So these are areas that attract price to the area to clear all those liquidity or orders resting there. So as we expect price to clear this area of liquidity here, as it's made this high point here, this is the area we can expect, the immediate area we can expect price to tap into. So we have identified this fair value gap and the demand zone. So let's go to 4 hour and then further refine what we have identified on the daily. To further refine what we have identified on the daily. Okay, let's clear this. Okay, so let's look at this again. Alright, so on the daily we had this wide area we marked as the supply area. So on the 4 hour charts, let's see how we can refine this area. So this it's the last candle we see here before this push down, causing the change of character. So in actual fact, the change of character would have been here, somewhere here. So let's move this. Let's move this to this area. Yep. So we have the change of character here. So let's take this as our area of interest on the 4 hour time frame. So this is where we identify to be the volume imbalance on the 4 hour on the daily chart. So we'll leave this here for now and then see if we can identify any imbalance associated with this push down. So currently, from what we can see here, the imbalance is somewhere also in the same area of the volume imbalance that we identified. So we'll leave it here. We'll go to the 1 hour time frame. Let's see the 1 hour time frame. But before then, I think we could have refined let's refine the area of demand as well on the, let's go to the 4 hour. Okay, so on the 4 hour chart, before this break off structure, change of character. Yes, so we'll leave this at this candle. Yep, and then so we'll leave this same here. We'll go to the 1 hour and then we'll see how we can refine it, further refine the area on the hourly charts. So there's a lot of data that's already printed as we are expecting price to further push down. So we have to move back to the left and then identify the origin. Okay, so on the 1 hour, this is what we have here. Let's see any imbalance created as price pushed down. So looking at from this point on, it's been efficient. We have a small area of imbalance here within the 4-hour or the daily area of supply. So it's a tiny area here that we can identify. Having this even makes it more powerful zone to look out for. So this will be, so if you have this within, it gives you more confluence, making it a much stronger area. So in effect we're looking to this coming week, we're looking to clear all this liquidity here, to tap into this area of imbalance and demand. But before then, we could expect another push up to this area, or there, as we have this confluence. Let me stretch out this to this. Okay. To be honest, let me just, that's it. Okay, so what we could expect this coming week is, as the market opens, this could happen, a push to this area back, or to this area here, and then we expect price to further push down to clear the pending areas of liquidity. So these are all areas of the liquidity down here. So we expect price to do this. So with that said, this is the area we have identified. So we'll put this here. So this there, or we could expect price to do this from this point on. So your stop loss above the high, if it pushes up here, your stop loss above the high of the area. So you have to do this within your maximum loss per trade, in identifying your lot size, in identifying how where to place your stop loss. It all has to be with to these areas we have marked. Yep. So these areas we have marked. So the reason for this is we have this liquidity all down here, and then we've also identified this area of imbalance. As this plays out, let's watch on, be on our guard as this plays out, and then see how best we can take advantage of this. Okay, let me just show you one of the trades that I took this week on analysis, on our analysis last week. I think it was on a BTC. I did some on gold as well. Where is gold? Gold. Okay. All right. Yeah. So, for instance, last week I was expecting looking at all this liquidity here, I was expecting price to push down to this area that we identified earlier on. So, and as we can see, price is traded below the 20 moving average. So once it got below the 20 moving average, I expect a pushback to the 20. So as you know, my entry is always either at the 20 or near the 20 moving average. So I identified this to be coming from the Y states. So this is one trade that I got into nicely, got some pips out of this. So as price, let's look at this. Where's the arrow? So we can see how price gave us this opportunity. The first point is where price traded below the last green candle, telling me that it's ready for a push down. So the first entry was on this second candle, as it gave me this gift play. So the gift play is basically when price closed below the previous opposite candle and then pushes up a bit, take it from there. So the entry was on here. The entry was from here. The entry was from here. I'll just use a different thing. That was a sell. Short trade. So this was the entry, the first entry, and then stop loss right above the previous high. So here we go. That was the area. So from this point on to the target zone. From this point to the target zone. That was a trade I took last week. We had this break of structure on the higher time frame. Change of character right there. So after this change of character, we expect price to push back to test or back to the area of origin. So it pushed up here, got above the 20. So with this event here that I saw was the reason why I got into the trade to this area of interest, because this is another area of, we have this liquidity area here. So I was of high probability, because I saw this area of liquidity where I know for surety price will come back to clear this area of liquidity. And also you can see this rejection here, and then close below the last green candle there, and then boom, that was it. So that was the trade on gold. That was the trade on gold. So the Bitcoin one is the one I missed. I couldn't spot that one. So with gold, this coming week, we've already tapped into this area. I'll delete this so that it's not bring confusion. So we've already tapped into this area of interest. So there's a high probability that we'll get maybe a push down to fill this area, or we'll get a turnaround back to this area of interest. So whatever it is, we trade what we see. So as we see, we trade our plan. So as I was saying earlier on, we look out for specific things on the charts. We need to be patient. Being patient is truly your edge in the market. Being patient is truly your edge in the market. Because without being patient, you end up taking random trades which might not fall within your trading plan. Just like any other business, before you begin, you should have a plan, a business plan. So if you are trading and you are without a trading plan, I assure you, you might not go far. You might not go far, because at the end of the day, you are looking at the charts, you don't know what you're looking for. But if you have written down in your trading plan, what you're looking for in your trading plan, as you sit and look, you are looking for specific things. Not until you see them, you are not going into it. So it's very, very important. If you don't have a trading plan, make plans to get one now before you get into trading this coming week. Take time out from this time on to put down a trading plan. Or if you need help, you can get in touch with me, and then I'll help you out to put one down. Okay, so we have about 8 minutes more to go. If you have any pair that you want me to have a look at, you can put it in the chats, and then I'll have a look at it. So guys, this is how I look at and analyze the charts. I look at it. So starting from the daily time frame to the 4 hour, to the 1 hour, to the 15 minute, the trading time frame where you get trades executed. So all you do is try to refine it until you get to a sniper area or a smaller area of interest, making it more clearer, because from the daily you have a wider area. So as you refine it to your trading time frame, you tend to get a smaller area you can look at to tap in. Yeah, so that is what I'm expecting this coming week. As I said, we are all speculators in the market. There's and again, what we are looking for is high probability entries. So from all the analysis we do, all we are trying to do is to find those high probability areas where we can take the trade from. So let's go into the week with our expectations, and also not to be too greedy. If the market gives you some money, just take it and tap out. Don't expect too much, as you can be humbled by the markets. If you don't humble yourself, the market will humble you. So what I would say is, open your eyes, trade what you see, defending your capital, because that is what will keep you in the game for a long time. If you don't defend your capital, you might be knocked out before you know it. The market will humble you in a way that will kick you off balance. So let's go into this with all that we have learned, and then let's keep on putting in the work. Never give up. Keep on keeping on and put in the work. Never give up, because there's a huge potential here. So just put down a trading plan and then trade your plan. Don't just take random trades and then expect to win in this game. So from me to you, keep at it and then push on with all you can, and I trust me, you will succeed. So see you on the other side. Thank you so much for joining me today, and then hope to see you again next week. Thank you. Bye for now.